Hey, welcome back. In today's video, we're going to talk about a brand new report from Realtor.com that covers the entire month of July. This is actually the first report I've seen which does that because the National Association of Realtors, for example, will not post their July's numbers until August 22nd. And I'm making today's video on August 7th. So this report talks about how houses are taking much longer to sell. This is all contributing to the rise of inventory levels, even though we're down compared to pre-COVID levels. We're also seeing a sharp rise of price reductions as well. So I have a lot to share in today's video, especially regarding inventory levels in today's video. It says, according to this report, the market cooled considerably as the housing market began to exit the peak home buying season. The home buying season is obviously in the spring months and not in the summer months, because during the summer months, a lot of people decide to go on vacation, put their plans on hold to buy a house, and then revisit those plans once your kids are back in school. So it's normal to see the market cool off starting in June and July each and every year. Meanwhile, sellers are becoming more grounded with patience and price expectations, with houses moving at the slowest rate since 2020. In other words, houses taking the longest to sell since we've seen this back in 2020. On top of that, the share of listings with price cuts reaching the highest levels since 2022. So the share of price reductions is basically at a 2-year high right now. On top of that, active listing counts or inventory levels is hitting a post-pandemic high, the highest level since 2020. All right, let's first talk about inventory levels, because there was approximately 36.6% more existing houses for sale nationwide compared to the same time frame in July of 2023. That marks the 9th consecutive month of annual inventory growth. In other words, inventory has been higher compared to the previous 12-month period for the past 9 consecutive months. However, though, we're still down by about 30.6% compared to the typical 2017 through 2019's levels. This is a continued improvement, though, because last month was a 31.2% gap as inventory continues to accumulate on the market. All right, let's have a look at a chart looking at inventory going back to 2017. I absolutely love this monthly report from Realtor.com because it covers pre-COVID era, whereas Redfin, for example, they often only cover the past several years. So the brown line right here is this year. There's approximately 884,000 houses for sale by the end of July. That's up by about 37% from 1 year ago. It's higher compared to 2020, which is right here, higher than 2022, which is the gold line. The pink line is 23 last year, and the green line is 2021. So inventory levels is basically at a 1, 2, 3, 4-year high right now, even though we're far below 2017, 18, and 19. I want to share something I put together for you guys. This is a kind of a monthly snapshot looking at inventory growth this year compared to years past, going back to the year of 2017. All this data I pulled from the Realtor.com's website, and I actually want to just share basically the rate of change. All the figures we see in articles is talking about inventory levels compared to years past during the same month. But in this section of this video, I want to talk about the rate of change, the increase of the amount of houses for sale this January compared to July. So the year-to-date change. So far this year, inventory has increased by 33%. We started the year at around 665,000. Now we're just under 885,000. That's an increase of 33%. This is much higher compared to last year. At this time last year, we were only up by 5% compared to January. So inventory has increased much faster compared to last year. Now here's a big difference though. There's also a big difference compared to pre-COVID as well, which I'll share with you guys. So inventory levels during the same time frame, January through July of 2022, inventory surged by 83%. So even though inventory has increased much faster compared to last year, the growth rate so far this year, a gain of 33%, is much lower compared to the huge increase of inventory we saw in 2022. Something that really caught my attention was back in January of 2022 compared to July, inventory basically doubled from 354,000 to just under 692,000. So inventory levels doubled in about about 4 months. So absolutely insane. And also increased by 83% from January through July. Much different compared to the gains we're seeing this year. What's also wild about this as well, look at the increase of inventory in 2022, July compared to June. There was an increase of 118,000 more house for sale in one single month. Let's look at the same time frame this year, just really quickly here. Looking at July compared to June, a small gain of only 44,000. So inventory levels, I think it's widely you can see this here. Inventory levels were skyrocketing 2 years ago, whereas this year we're seeing a big increase, but not nearly the same rate as 2022. Looking at inventory levels in 21, inventory only increased by 3%. So basically the rate of change this year compared to 2021 is basically tenfold. And of course, the reason why we saw a lack of inventory growing in 2021 was due to the fact we had all-time record lows for mortgage rates. And of course, right now we have rates much higher compared to 20 and 2021. So of course, that's why we saw inventory basically plummeting in 21 and also in 20 as well. 2020 down 14%. Now let's look at pre-COVID levels. So 2019 at this time, we were up by 12%. 2018 up by 21, and 17 we're up by 15%. Therefore, the average January through July change from 2017, 18, and 19 was a gain of 16%. This is much lower than the gains we're seeing today, up by 33%. So big picture, we're seeing inventory level or the rate of increase much higher compared to last year, but not nearly as high as 2022. But it's basically double the rate we saw looking at pre-COVID levels, up by 16%. One of the reasons why I talk about inventory so much on this channel here is this basically is a lead indication of home buying demand in our housing market. If inventory levels are absolutely skyrocketing, that implies that home price growth is going to slow down as well, or home prices will decrease. In contrast, during times where inventory is absolutely plummeting, like we saw in 21 and 2020, that supported home price growth. And that's of course why we saw record high home prices those 2 years. So this is very important to look at this because inventory is growing much faster compared to the previous years, but not as fast as 2022, which of course back then when we had basically a crash in sales, we also saw a correction in home prices as well during the last half of that year. Resi Club Analytics really had a good thing to say about this as well. It says in July of 2024, they're using their data based on Realtor.com, there was approximately 29% fewer houses for sale compared to July of 2019. Given that there is not an excessive amount of unsold inventory levels on a national market, it makes sense that spiked rates and strained affordability so far have not led to more regional home price corrections. That said, national active inventory levels is on the rise. Like I mentioned, up by 37% compared to July of 2023. This is suggesting the market is softening as buyers aren't purchasing homes as quickly as they are being listed for sale. In other words, we're seeing inventory rising at a faster clip compared to pending home sales, which is all contributing to the rise of inventory levels. That inventory picture varies quite a bit across the country as well. So for example, Resi Club Analytics had a really good map showing this, looking at inventory levels compared to this July compared to July of 2019. Austin, Texas has 39% more houses for sale right now compared to July of 2019. Tampa is up by 17%. Panama City up by a whopping 67%. In contrast, we've seen Hartford, Connecticut is down by 78%. Cleveland, Ohio down 56%. Milwaukee, Wisconsin down 46, and San Diego also down by 38%. In Sacramento, where I live and work as a real estate agent here, we're down by 29.3%. That's pretty remarkable because pandemic hotspots was, of course, in Sacramento, but also in Austin, Texas. But Austin, Texas is up by basically 40% right now, whereas Sacramento, we're still down by about 30%. Same goes for Las Vegas, down by 39%. Phoenix, Arizona is up by 0.2%. And also, let's have a look at San Antonio. Yeah, San Antonio, Texas, up by 25.8%, whereas Houston, Texas is still down by 14.5%. I'll have a separate video talking about more regional look at inventory levels. So stay tuned for that here in a little bit. And here in a little bit, I don't know when I'll make that video, but stay tuned for that. All right, going back to Realtor.com's report here, let's talk about pending listings, a measure of contracts being signed between buyers and sellers of existing houses. Pending home sales increased by 1.8% compared to 12 months ago, which is less than last month's rate of a gain of 2.4%. As rates fell in July to the lowest level since March, on expectations that the Fed's going to start cutting rates in September, it's widely expected the Fed is going to cut rates by 25 basis points or 50 basis points in their next meeting next month. We suppose that some home buyers may be holding out for lower rates over the next few months. So one thing I'll mention to you guys is that once the Fed decreases rates, it doesn't mean that mortgage rates decrease that same day. The rates we're seeing today, or the mortgage rates we're seeing today, is based on future expectations for cuts or changes to the federal funds rate by the Fed. So because it's widely expected the Fed's going to cut rates starting in September, the rates we're seeing today are already baked into the fact we're going to see those cuts coming up. So don't think that, okay, we'll have to wait until July to buy a house because that's when mortgage rates are going to decrease because the Fed's going to decrease rates. That's not how it works. Everyone's expecting that the Fed's going to start cutting rates next month. So therefore, that's why we're seeing a sharp pullback in mortgage rates this past week. In any case, hope that makes sense. Let's look at a chart looking at pending listings going back to 2017. It's a little bit messy here, but the brown line again is this year. So we have more pending home sales compared to 2019, 18, and 2017. So basically we have more pending listings compared to pre-COVID levels, which is pretty remarkable, right? Because we have approximately 31% fewer house for sale compared to pre-COVID levels. But despite that, we have more pending listings on a national level. Now, please leave me a comment below with your thoughts regarding this, but it's pretty remarkable to me that even though we have far fewer homes for sale right now, we have more pending listings compared to pre-COVID levels. This to me is implying that home buying demand is not tanking. It is in the gutter, but it's still higher compared to 17, 18, and 19, whereas back then we had 31% more house for sale compared to right now. Going back to the report, let's talk about new listings, a measure of people listing their house for sale. So new listings increased by 3.6% compared to last year's levels. That is substantially less though, because back in June, we were up by 6.3%. This is something I've been talking about on the channel for several weeks now. We're seeing a rise of new listings, but not increasing at the same rate we saw in previous months. So for example, it says here, we think the decrease in rates seen in July likely contributed to an increase in the pace of growth of listing activity. But it's not increasing the same rate we saw in June. So looking at their chart, let's take a look at that. So new listings, as you can see, basically took a nosedive in July compared to June. It is seasonal to see new listings basically peak around May and then decrease for the remainder of the year. But it took a nosedive in July. So the gap between this year and last year is only at 3.6%, whereas in June, that gap was at 6.3%. In addition, going back to this chart, it is higher than last year, but it's also lower than 2017 through 22, and well below pre-COVID levels, which is basically this grouping right here. back then, there was around 500 to nearly 550,000 new listings in those July's numbers, whereas right now we have less than 390,000 new listings this July. Now, this would look a lot different if this line was basically kind of going like this. That would cause inventory levels to absolutely pile up greatly and cause home prices to decrease as well, potentially as well. But right now, we're basically seeing new listings moving the opposite direction and getting very close to being at basically a, what is this, 1, 2, 3, 4, 5, 6, 7-year low. We could see that in August because in August last year, we saw a slight uptick in new listings compared to July. Here's what we also know as well. Houses are taking longer on the market to sell compared to years past, but less than pre-pandemic levels. The typical home spent 50 days on the market this July. This is when you list your home for sale, you accept an offer from a home buyer on average 50 days after that. Every market's different, but that's on a national level. This is more than, or this is 5 days more than this time last year, and also 5 days more than last month. July marks the 4th month in a row in which houses spent more time on the market compared to the previous year as inventory continues to increase. So in other words, houses are taking longer to sell compared to the previous year for 4 consecutive months, all contributing to the rise of inventory levels as new listings hit the market, but houses taking longer to sell, so therefore inventory levels are being supported upwards. However, time on the market is still about 7 days less than the average from July of 2017 through 2019. Let's take a look at that. Right now, days on market at 50 days, looking at 17, 19, and 18, the average was around 55 days. Now it's at 50 days. So houses taking longer than last year, which is right here. Before that, in January, February, March, and April, basically January through March, houses were selling faster than last year. Whereas ever since April, houses are taking longer to sell, which of course is all contributing to the rise of inventory levels. Every market's different, right? So on a regional level, in the South, where the growth of inventory levels has been the largest, the typical home spent 6 days more on the market this July compared to last year. In contrast, in the West, houses are only taking about 2 days longer to sell. Going back to Resi Club's chart here, this makes sense, right? Because in the West, as you can see, the vast majority of these metros has a lack of houses for sale compared to 2019, except for, in parts of Washington, but much of the West Coast has big decreases of inventory from 5 years ago. In contrast, in markets in the South, some areas are experiencing big increases of inventory, especially in Lakeland, Winter Haven, Florida, up by 57%, Northport, Florida, up by 12.8%. We're also seeing big gains in the Villages, Florida, up by 81.1%. All right, let's talk about home prices. And Realtor.com doesn't talk about closed home prices. They discuss listing prices on their website. So the national median list price, these are asking prices of people listing their homes for sale, showed the first seasonal decrease in July, falling to $439,950 from the $445,000 from the previous month. So 1 year ago, the median sold price was $440,000. Now it's basically the same at just under $440,000 right now. Now looking at these figures here compared to July of 2019, asking prices have surged by 37.7%. So if you're a home buyer right now, it's great to see we have more options right now because inventory is rising, but also we're not seeing this big increase of home prices like we saw in 2021 and 2020, where home prices, and also in 22 as well, home prices were absolutely skyrocketing. Whereas right now, asking prices are basically at the same levels as last year and only slightly below 2022. So just for comparison's sake, $440,000 this July. Compare this to July of 2017. It was only $280,000. And that, my friends, is a giant increase of 57% over the past 7 years, which is absolutely insane. All right, changing gears slightly here to talk about the share of price reductions, because the share of price reductions increased from 15.5% in July of last year to 18.9% this year. So look at the chart right here. We're basically at more or less 19% right now, which is more or less in line with 2 years ago, back in 2022, as well as 2017. It is much higher though than last year's time, because last year we're at 15.5%. Now we're basically at 19%. Now, even though we're basically at the same percentage of the price reductions right now compared to the correction we saw in 2022, here is the big difference though. Look in January. Back in January, the share price drops just over 14% this year. Now we're basically at 19%. So an increase of what? 5 percentage points. Look at the same time frame in 22 though. To start the year, it was only at 6%. And by the time we hit July of 2022, that increased to about 19%. So the share of price reductions basically tripled in 2022, which of course was one of the reasons why home prices decreased so much. Whereas this year, because we started at relatively high levels already, the increase is barely noticeable compared to the giant increase we saw 2 years ago. All right, let's change gears slightly again here and talk about how each of the regions fare, because there's some very big differences for these numbers I covered in today's video. So we're looking at the Midwest, the Northeast, the South, and the West. So looking at inventory levels in the Northeast, it only increased by basically 15%, whereas the South, giant increase of nearly 48%. The West increased by 35%. In regards to asking prices, that increased the most in the Northeast, go figure, because they have a lack of houses for sale. In contrast, we saw a decrease in the South, down by 0.3%, which again makes sense because inventory increased by about 48%. Now, looking at these figures, looking at pre-COVID levels, very big differences here. So the South, a small gain, or small decrease, I should say, down by 14% compared to the average July in 2017, 18, and 19. In stark contrast, the Northeast experienced a big decrease of inventory, down by 55%. That's why home prices increased by 51% there, whereas in the South, a relatively small gain compared to the Northeast, up by 35.3%. Here's something that's also wild as well. Looking at days in the market compared to pre-COVID, in the Midwest, houses are selling about 12 days faster. In the Northeast, 16 days faster, so nearly or just over 2 weeks faster compared to pre-pandemic levels. In the South, they're taking about 9 days faster to sell, and in the West, about 3 days faster compared to pre-pandemic levels. Lastly, I want to kind of go over asking prices, the areas that have experienced the biggest increases year over year, and also the biggest decreases as well. Let's first talk about decreases. The greater Austin area, asking prices down 6.2%. Columbus, Ohio, down by nearly 11%. Denver, basically the greater Denver area, down by 7%. Kansas City, Missouri, down by 7.7%. The greater Miami, Florida area, down by 11%. Oklahoma City, Oklahoma, down 6.1%. We're also seeing big decreases in the greater San Francisco Bay Area, down by 11.5% in asking prices, and also in the greater San Jose area, which encompasses Sunnyvale and Santa Clara, down by nearly 7%. In contrast, the biggest increases of asking prices year over year is Cleveland, Ohio, up by 11.2%. That's actually one of the few metros that are experiencing double-digit gains year over year. Also in Philadelphia, up by 11.4%. Rochester, New York, up by nearly 16%. That was the biggest increases of asking prices of the 50 most populous metros in the US. So with that said, this is kind of a longer video. So if you guys are still watching today's video, I appreciate you guys so much. There's a lot to digest in today's video. So yeah, if you guys get any value of today's video, then please hit the like button. Also, if you guys want a real estate agent referral, please check out my website, which is realestateteamfinder.com. Hope you guys have an awesome day. Like and subscribe, and we'll see you next video. Thank you so much.